What's going on, guys? I hope you are enjoying your Monday. Yeah, I just wanted to go over what's happening with Bitcoin at this time. Okay, gonna get right into it. So, I was looking at this falling wedge, or potential falling wedge, I would say for the past maybe like day or so. Um, There were some concerning parts of it because I guess for the past couple days, I've been mentioning that the bottom of this particular wedge has been pretty difficult to track. And that's the thing with diagonal support and resistance lines. They're very hard to track at times, and really like um, the key indicators when diagonal lines fail is the horizontals. So, I'm just gonna backtrack and everything like that. My last video I was kind of going more so into probabilities of a breakout falling wedge to the upside, and I failed to actually talk more so about risk mitigation in the last one, and yeah, I just kind of want to get into it and as to really break down what happened here, what really led to invalidation and stuff like that. But all right, I'm going to get into it here. Let me go to the 1 hour. Um, okay, so what happened this morning? Well, I was looking at this support line. It was holding up pretty strong, right? Wicks and stuff like that, invalidations. The thing is, when this particular move happened right here, and this was kind of like the first of a few, when that candle happened, that was really a warning sign, and that was a sad thing because I I didn't I didn't really take. I believe this happened maybe like an hour. I want to say like an right after I did the last video. When I see a candle break out of the pattern and break back into it, that's like weakness. That's just real weakness. Um, Now, you know, really at that time, the 21 EMA was acting as resistance, really invalidated it at this point, or invalidated the move, in my opinion. Um, but, I still gave it a shot, waited, it continued. Okay, support was holding, and there was a bullish engulfing candle. And yeah, but the candle right afterwards further invalidated um, any potential move to the upside because the 21 EMA was acted as resistance once again. Now, there was some saving grace to it where, okay, maybe if on the 37-minute time frame, and this is my current logic, there's maybe like a doji candle, maybe outside or near this, resistance line. Something like this, right? This doji reversal candle. Maybe something like that. But there just wasn't. I was just kind of seeing resistance, resistance, resistance. And unfortunately, price broke back down into the falling wedge, which is rather strange. I can actually look it up. I think it was a falling wedge. Falling wedge. Uh, yeah, probability here. Let's go with Bukowski. If you don't know who Bukowski is, he's one of the better. Um, he's one of the better long-standing traders, and essentially, yeah. So essentially, the failure rate of a falling wedge is between 26 to 29%. Okay, so there was a 70%, roughly a 70% probability that this was going to continue to the upside. So, the percentages were in your favor, but what were the lines in the sand? So what were the red flags here? Red flags, in this particular case, I think the biggest one that I saw was the hidden bearish divergence that popped up. Really, it popped up all sorts of places. It really started here on the 15-minute. I like to make entries and exits on the 15-minute. I use the 4-hour to validate. I use the 4-hour to validate. I use the daily 4-hour and the 1-hour and the 15-minute specifically. But what I saw on the 15-minute, right when price was going back to break out here, was these divergences. Now, this divergence here didn't really worry me all that much, but this confirmed bearish divergence on the 15. And just the fact that it followed up with a hidden bullish divergence, hidden bullish divergences are weaker than actual bullish divergences. So that was a big red flag for me. Also, you can go on to the 30, well, it didn't show up on the 30-minute, it was more so the 37-minute time frame. And it sucks, I know not a lot of people really trade on the 37-minute, but it's a precursor to the 1-hour. But yeah, like right when this hidden bearish divergence, and if you can zoom in real quick, I'm going to zoom in, I'm going to show you. When this hidden bearish divergence triggered, man, that was such a disappointing sign, because if you look at the last, and I'll show you right here, the last hidden bearish divergence and how destructive it was for the overall price, until another bullish divergence kind of came about. And yeah, it was literally right here and not until here. So it was like a 3.8% dump. So having that in the back of my head, it really invalidated this like falling wedge pattern. So I needed to see more bullish confirmations. So as you can tell on my support resistance indicator, and I usually prefer momentum on the 1-hour, once price hit below this right here, the 20.359, pretty much that was all she wrote. And also I do have an indicator here. I don't know if you can see it. I'm going to zoom in real big here just so you can see it. You see those? Do you see that X right here? That X is oh crap, whoopsie daisy. I'll just delete it like that. Okay, that indicates whale manipulation. Not too sure how it's calculated, but essentially it gets like the volume weighted average price relative to the actual sizes of smaller or of a few wallets, right? So it's able to indicate anomalies within the volume weighted average. It just indicates that whales are manipulating the price in their favor. Now, this one didn't really worry me, but I usually like to look at like the 1, 3, and the 5 because they're kind of like, Fibonacci numbers. I'm a big Fibonacci junkie when it comes to stuff like that. But I went to the 3-minute. It's a little visible on the 1-minute, the 5-minute. Yeah, it's visible on the 5-minute. But yeah, on the 3-minute, now when I noticed this, whales were purposely pushing the price below this line here, this line in the sand for the pattern breakout. So the thing about pattern trading is that it's one of the more simpler methodologies of trading. Now, it's a probability standpoint. It's not foolproof. You have to understand the probabilities between each particular pattern itself, but then also weigh it in with other things at your disposal to really mitigate risk. And at this time, when I saw price break below my support resistance indicator, even before that, failed to break above the 21 EMA, also with various red flags with whale manipulation at key points of support and losing that support. I mean, it was just a trap waiting to happen. It's unfortunate because like literally right an hour after I ended my last video, I was super bullish. The video that I had done was like all the indicators were saying the right things and everything like that. But as soon, and this is how fast the market is, uh, and this is why I really like and prefer videos, is because I get uh, my full theory out there to the masses and stuff like that, and really just kind of helps journal probabilities, helps me journal like what's exactly going on in my thought process, and what's invalidating, what's validating, etc. But yeah, when I saw all these different factors, like, and it's very unfortunate because it happened like literally like an hour right after I ended my last video. So yeah, but regarding everything else, the T also this wasn't good. So the RSI here on the 1 hour, and really like on the 37-minute, it was a little bit faster. So the 37-minute right here, it crossed back down below the slow moving average, which is bearish. So this is what happens sometimes when price has been in the bearish control zone. It tries to leave the bearish control zone, but bears, basically short traders, they'll try to keep the momentum, the market sentiment in the bearish control zone. So like I said before, we are in a bear market, so of course price is going to hang out in the bearish control zone longer than it is in the bullish control zone. Um, so when I saw this cross back below as well on the RSI, it was kind of like, oh, okay, no, yeah, the bears aren't done here. The bears aren't done. Let me go to the 37-minute. It's really clear right here when price went back below it. I was like, uh-oh, that's not good. Not only that, but it didn't even, price wasn't above here long enough to confirm a cross or to confirm the 9 EMA as support either. There was some attempts here, but like I said in the last video, was you want to see a breakout and then a back test as support. Now you kind of got it here, but why wasn't this a good indicator? The back test. Well, the reason it wasn't necessarily good was everything that I had just mentioned. The inability for price to stay above the 21 EMA, no true support being built. I mean, this this right here, this line, you don't want to see it up here. You want to see it down here. Like you want to see support, you want to see support below price action, not above it. And also this right here at the support line, well, previous support, now resistance, price was price was validating this as resistance right here. And then the next wick. So when you see wicks above price, that just indicates weakness. And the next following wick was lower than the higher wick. So that's not conducive to strong price action. Now I prefer to go off of candle closes, but wicks are also another indication. But yeah, so if you notice, when price broke back into the pattern, that's when people's stop losses kicked in and it created a capitulation event. And that's kind of what we've been experiencing for the past 2 hours, this capitulation event. This candle, this one sole candle is 1.34. So there are a lot of people who trade on these patterns, but given that it is crypto, and unfortunately, yeah, there are a lot of whale games. Bitcoin is not a, I wouldn't consider it like a fully liquid asset. It's not like a super stable asset. Like technical analysis is more so more fundamentally sound with larger cap assets, like forex trading, all that kind of stuff. You can still do these routines and pattern recognitions and like all these like technical analysis processes and reading momentum and reading all these different order books and all that kind of stuff. That stuff is still valid within Bitcoin, but the probabilities are less, if you will. So you have to have um, really like risk mitigation. You have to have your stop losses. You have to have your break points. You have to have your take profit zones. You can't just like sit in this asset. Like if you're trading, right? You can't just sit in this asset and just double down on it when the price is going against you. That's one of the worst things that you can do in these situations. Now, in regards to dollar cost averaging and all that kind of stuff, that's a whole different strategy. I'm more so talking about like swing trading, day trading, scalp trading. Um, but yeah, anywho, as you can see, these candles on the Heikin-Ashi are flat tops, so that indicates strong momentum. Now, um, all hope is not lost for the bulls. Yes, this falling wedge pattern did break to the downside. It's pretty clear cut at this point. As you can see on the hourly, there were whales. And that's the thing. What you know, whales are powerful when they are seen, when they can be seen on the 1 hour candle charts. You know what I mean? Like, like there's some heavy hitters in here that are trying to push the price in their favor. But also there were some other things that also, it makes sense as to why what happened. There was a very, very fresh and recent cross of the 21 EMA under the 100 moving average. So we have entered a new phase of a fresh bearish trend. So um, the fact that bull patterns are breaking bearish, it does make sense as to why that is going down. Now, the probabilities of this falling wedge pattern is really in the bull's favor, but we are in a very precarious situation where, yeah, we're in a bull market. Price just broke under the 100. Um, there is obvious short sellers that are, you know, uh, swaying price in their favor as well. Um, but to go back to the horizontal lines, so at this time, 19.8 is a quote unquote line in the sand. Also, we do have this green supply line here. So it's not completely lost for the bulls to pivot this price. Um, But yeah, at this point, I do think that there is confluence. There is some form of semblance of true support right around this level, right around 19.8, because it crosses with the supply line. Uh, it also crosses with a horizontal support line um, as well. Now, in regards to Fibonacci, I'm going to turn off all my indicators here just so you can just focus in on the Fibonacci lines here. Yeah, I'm going to go all the way back to wick here. Boom. Okay, so price actually crossed the 618. So, also from a Fibonacci standpoint, when the 618 is broken and back tested as resistance, there is a high likelihood that we're most likely going to be seeing either the 382 or the 236. So this is rather interesting here. Now, if this supply line gets broken, and it's very close to getting broken, um, yeah, I mean, we could definitely see crazy intense price action to the downside. Because if you zoom out here, and I did this on the last video, and it's really visible on the 4-hour chart here. Let me do this. Just focus in on the blue lines here. Let me go to the 8-hour so it looks a little cleaner. This is what you call a rising channel. Okay. rising channels are very bearish, frankly. So what happened back here, as you can see, it was a rising channel, if you will, which ultimately turned into a big bull flag. Big bull flag. So what I'm kind of concerned here about price is if this green supply line is broken, back tested as resistance, we could see lower levels. We could still continue to see lower levels, which basically happened here. And it's going to be quick. If it breaks, it's going to be, just down only for a little while. Now, as a forever buyer, as a person who will always be in crypto, I see the future. I've been orange pilled, years ago. So I do see blockchain as being around for a long time. So as a buyer, I'm excited about this epic dump, potential epic dump, okay? I'm excited about it. Um Now, I'll be honest with you. I mean, there were times I was dollar cost averaging up here. You know what I mean? So I do have some like hodl positions that are just underwater right now. But long term, I don't really care because, one Satoshi equals one Satoshi. That's why I bought Bitcoin, because it is fixed in terms of supply. And there's other assets that I've bought that I'm a big fan of fixed supply cryptos with like utility, all that kind of stuff that I could maybe do another video about that later. But at the end of the day, um, going back to current price action, um, Bitcoin is staring into the abyss right now. Bitcoin is definitely staring into the abyss, invalidating 0.618. Couldn't break above 0.618. Now trying to head down, and ultimately, in all honesty, it doesn't look great. It doesn't really look great. When you have a bullish pattern break bearish, and the Fibonacci has been rejected not once but twice. Look how not once but twice was rejected. It broke back below this, now you can call it resistance line here, invalidating support. So it's tough sledding for the bulls right now. There's a lot going against them. But yeah, this particular zone here is going to be really interesting. So the next couple hours here will be pretty pivotal in terms of overall structure. Like, will price bounce? Will we see, a continuation to the upside? I mean, look at this. It's crazy. Even the heart line is being respected. So when it broke below the heart line, which is this dotted diagonal dark blue, it tried to go back up and then just got invalidated. So there is some onus to this rising channel, which is ultimately bearish. But we'll see. I mean, just like what happened here last time, what really kept the bulls alive in regards to this particular zone here, and look how disgusting this market cipher. It's like a pimply, just gross scenario. That's why I like TSI, it's a little bit more smooth. But when you have divergences like this, it's very faint. But when you have divergences like this, you get a better semblance of what's really going down. And just looking at the 4-hour TSI, it looks like there's more to the downside. There was an attempt at crossing up, but it was just immediately invalidated. So if I go to the 2-hour here, it's a little bit more apparent. Yeah, there was an attempt, but nope, no cigar. So it's back to the drawing board for the bulls. But yeah, ultimately the real key zone in my opinion, is the 19.844 zone. Could see some consolidation, stagnation here, but that's kind of my line in the sand at this point in time. But anywho, yeah, just wanted to update you guys in regards to what I saw. Hope this helps in regards to just analyzing the markets for you all. But yeah, if you found this video insightful, informative, please feel free to like, subscribe, and comment. Yeah, let me know if you want me to look at any other assets. I'm happy to do technical analysis in regards to any particular assets of your choice. But yeah, I'm going to close it out. Take care. Have a good rest of the day. Bye bye.